hope you enjoy the conference and engage with other experts and really advance the journey here. And it has been quite a journey, this world of climate reporting and ESG reporting and sustainable business management. What an exciting journey that we're on here. In fact, in June 26th, you might recall the International Sustainability Standards Board, which had just been formed in November of 2021, issued its first two standards for consistent and comparable climate reporting around the world, called Regulation S2 for climate reporting, to be effective in January of 2024. And the International Sustainability Standards Board also issued Rule S1, which relates to reporting risk on climate and milestones to achieve net zero 30 and things of that sort. So it really is an incredible, fast-paced environment as we get serious, quite frankly, about sustainability reporting and sustainable business management. A lot going on, as I alluded to, on the standards side, on the regulatory side. You might recall, I'm sure you know, that the Securities and Exchange Commission in the U.S. Is working on rules for cybersecurity, as well as climate reporting and Scope 1 and Scope 2 and Scope 3 and reasonable assurance and absolute assurance. So there is an awful lot going on, an awful lot to absorb. And as part of this journey, COSO, which I'll define and describe in a few moments, on March 30th put out a new, what we call supplemental guidance document. You see the title there, Achieving Effective Internal Control Over Sustainability Reporting, Building Trust and Confidence. And you know, the focus initially is on climate, but as I alluded to earlier, other parts of ESG and sustainable business management are up next. Not only for external reporting per regulatory dictates, but also to manage the business holistically and make intelligent choices for many, many stakeholders. So we put out this studies, myself and my co-authors, on March 30th, but I do want to hone in a couple keywords before we advance the conversation. Building trust and confidence, absolutely critically important. You know, there's been studies done by Deloitte, by PwC, studies on trust in business and government, et cetera, et cetera. And typically the results currently indicate that 80% or 75% of respondents just don't trust the data they're getting as it relates to ESG and climate reporting. The nature of the data is different, it's measured differently, it's more qualitative, and you know, there are of course always opportunities for fraud and deception. The number of shareholder suits have risen dramatically. So our focus here is on the quality and value, reputation, and trust in the data itself. Both the climate type of data, but also as we evolved more broadly into human talent, technology, and other aspects. So I'm proud to be here once again. I am a former COSO board member. My co-authors, pretty diverse group in terms of areas of expertise and where we focused over our course of our careers. Shari works for the Institute of Management Accountants, and she's had experience with Thomson Reuters, with sustainability. She's a lawyer, corporate attorney, so she brings a diverse background. You know, my background is more on the corporate practitioner side, the preparer side. In addition to being the former president and CEO of the Institute of Management Accountants, I was also at AT&T for well over 2 decades. In various CFO type of jobs, including CFO, preparing results, reporting results, FP&A, M&A, data analytics, you name it. Bob Hirth, you might recognize that name as well from Protiviti, which became one of the leading advisory consultants in the world. He was also the former chair of the Committee of Sponsoring Organizations, or COSO, that I'll talk about in just a moment. Bob Herz probably doesn't need too much introduction, but Bob, of course, was former chairman of the FASB, the Financial Accounting Standards Board, but was also a forerunner and a founder in many ways of the International Accounting Standards Board, the Sustainability Accounting Standards Board. And I think one of the things we've all learned in this environment is that it has been an alphabet soup of frameworks and organizations, but as I alluded to earlier, in November of 2021, huge milestone with the creation of the International Sustainability Standards Board to kind of sit alongside the International Accounting Standards Board. And that helped to consolidate and make more consistent the various standards and voluntary reporting frameworks. Just to finish out, Doug Heilman is not an internal controls guy, not an ERM guy. He is a sustainability ESG guy because one of the things we've learned about this environment of sustainable business management is that it really does extend the internal value chain as well as the external value chain in terms of participation in assessing risk, participation in achieving goals related to sustainable environment, referred to as double materiality. But Doug brings that sort of non-technical, non-finance and accounting into the mix. And then last but not least, we have Brad Monterio, who is an executive at the Institute of Internal Auditors, obviously part of the internal assurance and the overall ecosystem of trying to assure all types of data, both financial and non-financial. So the audience and the objective here at a very, very high level, we really want to, at the end of the day, improve trust and confidence in the reporting and the decision support around sustainable business management. Simply put, we think good internal control is good for business. It's not just a finance and accounting thing, it's a business thing. So ultimately, the benefit here is effective internal control that promotes trust and confidence in all forms of reporting, quantitative, qualitative, extending beyond your internal supply chain to include, for example, Scope 3, your customers, your upstream and downstream partners. Definition of terms, before we define COSO a little bit better for you. ICFR is internal control over financial reporting, for example, to support Sarbanes-Oxley requirements and other mandatory requirements, but also non-mandatory to better control your financial reporting. And a new term that was in our study that we launched on March 30th, internal control over sustainability reporting. And in both cases, both financial and sustainability reporting, they rely on the same ecosystem in COSO, the same identical framework with components and principles. Key audiences, as I alluded to earlier, actually one could argue is even broader than financial reporting and financial decision making. Inside the company, it includes the board, it includes the C-suite, internal audit, but many, many stakeholders that are very, very interested in this data: investors, data intermediaries, rating agencies, insurers, customers, more and more making their buying decisions based on achievement of various sustainability goals. And last but not least, from a stakeholder perspective, your own employees. Studies have shown very, very clearly that for retention and acquisition, that a genuine commitment to sustainable business management is only going to help your human capital initiative. So you see the external view there as well. I don't want to forget, of course, about academia from a research perspective and from a curriculum development perspective, because one of the points I'll make here is that we need to build in sustainability and ESG into our curricula, into our purpose, into our FP&A, into our internal controls, right? And the focus here is internal control. So an overview of COSO, you might be familiar with it. You might be familiar with the fact that it's a cube So it doesn't necessarily kind of conjure up a nice integrated ecosystem, connected like in integrated thinking, but it is. And there's our cover. We were pretty impressed the fact that a bunch of semi-technical people could actually come up with something that we thought was kind of cool. But there's 5 essential components in the COSO internal control integrated framework for both financial and non-financial, and you see them there. The control environment that we'll talk about, that's the foundation, the core values, the role of the board, accountability, the actual risk assessment, whether it's single materiality and focused on the financial risk of future climate-related events, or double materiality that also looks at the positive impact you're making for multiple stakeholders in protecting the planet and its scarce resources. Control activities, information, communication, monitoring activities. So, who is COSO? COSO is the, as I alluded to earlier, the Committee of Sponsoring Organizations. It consists of 5 organizations, 5 what were viewed as accounting organization back when it was formed in the mid-1980s. You see them there. FEI, by the way, is Financial Executives International. But since the COSO was formed essentially by an act of Congress in the U.S. in the mid-80s, these 5 organizations, number one, have become very global. IMA, for example, back in the mid-80s was probably 95% U.S. and 5% outside the U.S. Today, IMA is 60% or more of its operations are outside the U.S. And the other thing I will say is, although we're referred to as accountants and proud of it, it really is not accounting 1.0, it's accounting 2.0, where we integrate decision support, we integrate technology, we integrate strategy, we integrate data analytics and data science. So the world has changed, and so has the composition of what we focus on in COSO. So COSO milestones, essentially it was formed mid-80s, late 80s. An act of Congress, James Treadway was the first chair of the National Commission on Fraudulent Reporting as a result of savings and loan scandals in the U.S. Essentially, Congress said, hey, can you 5 organizations come together and help us? Because this may not be the end. And of course, being at AT&T and dealing with my friends at MCI WorldCom from a competitive perspective, I know the impacts that frauds have on lives and people. And so, very, very important. 1992, COSO launched and released its first ever framework, internal control integrated framework. In 2013, it updated this framework. Very, very importantly, it added, in addition to financial objectives to control the outcomes from a risk management perspective, it added non-financial objectives. Now, did we talk back in 1992, let alone 2013, about environmental and climate issues? No. Did we talk more about balanced scorecard, strategy map types of things that says, hey, there's more to running a business successfully than short-term financial statements? It's a balanced view that impacts customers and employees. So, we've always had our eye on controls and risk management around non-financial objectives, but COSO in 2013 made it explicit. Now, in 2017, can you just step back for a moment, like audience participation, and think about where you were back in 2017, September in particular, and think about where we were in the whole world of sustainable business management and climate reporting. Of course, a lot of different frameworks out there, a lot of different thinking, integrated thinking, the GRI framework, SASB in the United States, the Sustainability Accounting Standards Board, that eventually put together material decision useful metrics for, I believe, 76 or 77 industry verticals, and then various other frameworks. And so it was a bit of a mishmash of disparate frameworks. Sometimes they appeared to the market practitioners to be a bit competitive potentially, but again, That very much changed as we move forward. But back in 2017, Bob, Brad, and I said, well, let's put a stake in the ground. And whether we were first movers in terms of the importance of the data in reporting and decision making for multiple stakeholders that I mentioned earlier, we did about 8 case studies, fast forward to March of 2023, we just put a much more depth and breadth, and then coined this phrase, internal control over sustainability reporting. There on the left, you see the May 2013 core or base foundational framework. By the way, it's available for free off the COSO website, www.coso.org. And then the study that we've been talking about, it's a little over 100 pages, but it's digitized. It has case studies. It has insights. It has a lot of good narrative that I believe is digestible and applicable to improving the quality of reporting and the quality of enterprise decision making. I alluded to the fact earlier that sometimes you hear internal control and you think, that's for the controllers. We'll wait for them to kind of call on us and bother us for reports and analysis. But it really is a process that directly relates to achieving objectives, financial and non-financial, as you see there. The term reasonable assurance. Reasonable assurance that you have an effective system of internal controls over financial reporting, which is essentially language in Sarbanes-Oxley Section 404. So it's a broader remit, it's a broader focus, it's a broader engagement, perhaps facilitated or led by the CFO and controllers team or convened by them, but certainly not solely executed by them. Here you see the structure of the cube, or part of the cube. You have the 5 core or foundational components, 17 principles, and then we introduce what are called points of focus. Now, COSO from 2013 always had these points of focus, but they're really to help demonstrate how to apply the particular principle or component. So it's more in the how-to. I'll also point out that in this framework, the definition of an effective system of internal control over financial reporting is that essentially the 17 principles are present and functioning. So it gives the organizations a lot of opportunity to scale working with their internal and or external auditors to make sure they maintain an effective system of internal control. Here's my point from our Chair Emeritus about the fact that the responsibility for internal control resides with everyone. It's a business value. It's part of long-term value creation. We're all in this, and to some extent, it's a matter of finance and accounting types teaching the rest of the organization the business importance of internal control and risk management, but also those who are expert in the environmental science and product health and safety, educating the finance and accounting team for business context so they could be more effective business partners. As I alluded to earlier, the COSO framework is holistic. It's about objective setting and realizing the achievement of objectives and managing the risks around that. One of the questions that I often get that you might be thinking about is this topic of COSO and internal control over sustainability reporting, is it really only for large accelerated filers or public companies? And the answer is no, absolutely not. It's applicable and scalable to organizations of any size, any structure, anywhere in the world. Private companies, small companies, need to compete for capital. They need to compete for funding. They need to compete for human talent. And so although they might not initially have that regulatory, mandatory requirement, they're still going to be looked at by these various stakeholders, and I think their credibility and reputation is on the line. So the answer is yes, the guidance is applicable to all of those organizations. And the other question we also get as I move to the next slide is the COSO framework only useful or applicable to external reporting? The answer is absolutely not. It's useful for non-financial reporting, financial and non-financial enterprise decision making, to lay out that story, to do your forecasting, your data measurement, your data modeling. I alluded to the fact on this slide that ESG reporting, though, is different. The data is different. First of all, it extends beyond the value chain into scope 3. And you might recall that scope 1 is your direct emissions, for example. Scope 2 is indirect or purchased, and scope 3 is your upstream and downstream suppliers, who you need to figure out how to bring them into the framework as well, not to mention your customers. So much more judgment, much more estimates, much more opportunity for error, but opportunity to apply good principles of data modeling and data analysis in a controlled, well-governed environment, and the COSO framework can certainly help. The framework really is a connected ecosystem, not just on what to report, but how to report it, how to build this internal capability and capacity into your organization, starting with purpose and objectives and risk management and reporting and monitoring. We also have a enterprise risk management framework in COSO, developed in 2004, updated in 2017. It's separate but related, and it's a broader, more strategic framework that definitely connects into the internal control assurance piece, if you will. So the control environment, this is where it all starts. You see the infamous or the iconic cube from 1992. This is where it all starts, folks. This is where we need to build in ESG and sustainable business management. Build it in, don't bolt it on. If we're going to take this seriously from a societal, from an organizational perspective, and from an individual business and consumer perspective. It incorporates the fact that there's an ecosystem in the control environment consisting of management, the board, internal and external auditing. Fraud risk, extremely important. Greenwashing. Some major corporations are the subject of class action lawsuits, claiming, for example, and this is a specific example fairly recently, that this large multinational corporation misled investors and other stakeholders on its net zero carbon emissions claims using accounting offsets or carbon offsets to make the case that they're on track as opposed to genuine investment in new or alternative sources of energy. So sadly, the opportunity for fraud risk is something we need to really manage. And again, in the guidance, we give examples, we give cases, we give insights, and it is very much a journey of learning from each other in a community. Control activities, information technology, Principle 11, critically important given the nature of the data, as I alluded to earlier, more qualitative, more estimated, but wow, what an opportunity for accountants, for data modelers, for data science to put tight confidence intervals and risk tolerances around this type of data. Very important information and communication, both internally and externally, given the extended nature of the value chain. And then, of course, the world is changing quickly. This is a transformative world we live in, whether it's geopolitics, whether it's corporate reporting, whether it's technology, AI, machine learning, ChatGPT, and the list goes on and on and on. So we need to continue to monitor the environment, to monitor the risk, the achievement of those objectives, and how our system of internal controls over sustainability might change. So one final question before I wrap up, and thank you so much, and enjoy the rest of the event and the conference. Learn a lot, take a lot of notes, ask a lot of questions. I think this one I've covered, but it seems as though we're spending an awful lot of time on external reporting and regulatory mandates. Can you share more on why you believe, Jeff Thomson or Bob Hers or Shari Litton, why this framework, this supplemental guidance is applicable to enterprise decision making? And the answer is COSO was always designed, certainly since 2013, to apply not only externally, but also internally, not only reporting, but enterprise decision making, enterprise optimization, enterprise resource allocation, making smart choices that serve your multiple stakeholders. So with that, I'm going to end. And again, thank you. And feel free to send any questions in. I'll be glad to answer them, because I'm likely to learn as much from you as you've learned from me. Thank you so much.